Hi, I'm Mike Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. Well, the market had a couple of positive baby steps in December that we had talked about a couple of times, but the bears completely mauled those this week, really from the get-go, led by growth stocks and growth indexes, where we're seeing a lot of the NASDAQ's down maybe 3.5%, 4%, growth indexes are down 5 to 7 or more, and a lot of individual stocks are down 15 to 20%, really almost like a second leg down from the late November, early December, almost mini crash. Now, it's not all, I'm not going to sit here and trumpet sunshine. It's not all terrible news. Believe it or not, the intermediate term trend of the market is still mostly up. You could call it sideways, but it's kind of technically positive. And there's quite a few pockets of the market that look fine. Nothing's really running away on the upside. I mean, a couple stocks here and there are doing well. But there's quite a few names, like I know in Top 10 Trader, that really have held up well, obviously outside of the growth arena, generally in the financial, commodity, industrial, transport, stuff like that has been acting pretty well. But overall, I think, there's just, number one, there's even in the broad market, there's still hundreds of stocks hitting new lows on some days. Number two, risk is elevated here. It's kind of like either the selling can spread from growth to the rest of the market, or you might see a big rotation. There's a risk of that, which means some of these things that are acting well can come down while some of the beaten down stuff can bounce. And I'll talk about a few of those candidates. So right now, I just think less is more, definitely. We've been cautious for a while. I think now, especially if you're a growth investor, should be even more cautious. And don't let things run away from you on the downside. I do think there'll be some opportunities on bounces. I do think the decline has become pretty obvious from a growth perspective and the ARK, funds and just stuff like that. So it wouldn't surprise me if we got a bounce, if maybe we saw some positive earnings reactions. But there's a lot of damage to repair in growth world, so we'd be relatively cautious. Plus, a lot of the stocks that are acting well, as I'll show you, some of them are defensive oriented. And again, those are sort of at risk of a rotation if and when we do bounce. So right now, I just think it's time to be careful. In Cabot Growth Investors Model Portfolio, we took some lumps this week. We came in already like 44% in cash. We're up to about 50 now. We could go a little higher. We just kind of have 2 or 3 names on tight leashes, and we'll cut them if need be and go from there. We do have a couple things acting well, but we'll have to see how it goes. Right now, I think it's better to be safe than sorry. Okay, let's hop on the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So we'll start here with the NASDAQ. And even the NASDAQ, it's not too bad, relatively speaking. If you're a mutual fund investor, you're like, hey, it's a bull market. And I think it is a bull market until proven otherwise. But you're starting to get, a little bit of toppy action where A, the moves are wild, B, there's dramatic down moves. And obviously this big break on, I think that was Wednesday, not just below the 50-day line, but just decisive on the way down. It doesn't look good. I don't really predict, oftentimes maybe we break below support and then bounce back. Indexes are kind of hard to judge that way. I would just say for the NASDAQ and most growth stuff, the trend is down. Now, I do want to point out, again, I'm not going to sit here and totally trumpet sunshine, but, here's the New York Composite. Looks fine. Okay, the S&P 500 right here looks fine. I mean, it's right at the 50-day line, so maybe it cracks today. I'm recording this late Friday morning, January 7th. Who knows? But so far, higher lows, looks okay. And even the broad stuff like, let's look at like IWM, the small caps. They don't look good. They're not positive, but it's not a complete disaster. Maybe you can kind of argue you got a bottoming formation in here. MDY, which is the 400 mid cap, is actually looking a lot more like, it looks more like the New York Composite than the NASDAQ. Okay, so in the broad market, there's some stuff, especially the broad, the smaller and mid cap stuff that is kind of turning around, and these things have gone nowhere here for 8 or 9 months. So we'll see. Maybe it can kind of continue higher. But the real story here is a couple fold. One is, you look at, and I review these more and more each week. This is QQQJ, new low here this week. Again, this Wednesday break was really bad. And I think that was on the Fed minutes. Not that I really care about the news, but, really bad. Now, we could bounce here, and I'm going to talk about that in a second. Some of these things are kind of stretched. Plus, there's a little support here. You got to shake out below support. This is all short term. This isn't really my expertise, but you see it enough, and you're like, okay, I wouldn't be surprised if we, maybe had one more bad day and then bounced, sort of thing. But either way, the trend is pretty bad. FFTY, which is the IBD 50, high relative strength sort of thing, is just kind of a, again, there's a little support in here, but just you can't say the trend is up or it's developing. And of course, ARK is a disaster, ARKK. Really on the weekly chart, you can just see, this was the February peak back here, February of 2021, after this massive move. And now it just looks like last year was kind of a broadening top here. And now we're just accelerating lower. Again, it's pretty obvious at this point. So we'll see how it goes. And you're really just seeing things like, just to give you a flavor, I'm not going to sit here and just recount the bloodshed, but, Affirm, AFRM, this is buy now, pay later. Pay now, buy later. I know, but it looked good, and it certainly needed a pullback. But all of a sudden here now you're 55% off the high, so that's your glamour stock. Cloudflare, which I think is actually up this morning, but again now you're 53% off the high that was set, I don't know, 6 weeks ago, something like that. So you're just seeing a lot of this sort of just unraveling. Okay, on the index and sector side, what I'm watching here going forward is two things. One is the semiconductors. So this is SMH. You can look at some other semiconductor ETFs if you want. So far, semiconductors have been sort of a port in the storm. They're not doing great, but they're, as a group, holding up. And I'll mention one or two of them here in a second. And it's holding the 50-day line. If the chips really cave in, that could, I'm not going to say the NASDAQ's going to get so much weaker. It's already pretty weak, but that could be kind of another leg that gets taken out from the stool. So I'm kind of watching that. And on the flip side is XLP, which obviously is consumer staples. Now we have seen, just to kind of go on a tangent here, I have seen XLV, which is kind of big cap safe, mostly big cap safe healthcare. That has, you can see it had this nice run. It's sort of a defensive sector, and that has sold off a little bit. You have had XLU pull in a little bit. Of course, interest rates have come up so far this year, but I still think XLP is really the key, the most clear-cut defensive sector, so to speak. So, can this kind of give ground and the NASDAQ find support, or does this just keep marching higher while growth stocks are in the dumps? I think that's kind of, it's an interesting secondary or tertiary thing to watch if you're looking for clues from the sideline. Again, this is all kind of nibbling around the edges, okay? I did want to mention, because I do get questions on this, I'm not a catch a falling knife guy. I'm just not. That doesn't mean I'm right. It just is not my style. That said, like I was saying earlier, sometimes you see this. You see a little shakeout below support. Obviously, the market stinks, or at least the growth stocks stink. But it's at the 200-day line. This is Zscaler, ZS. And, maybe, who knows, it's Friday morning, but maybe we start finding a little support. If you want to be a bounce guy, some people like to kind of nibble here, keep a tight stop in here, and then try to sell some on the way. If you do get a bounce, sell some on the way up. I think there's the potential for that. I'm not predicting it at all. I'm more on the sell side than the buy side right now. But, you do see some of this, and I am getting some questions, so I wanted to address it. I wouldn't be looking for the worst of the worst, but even something like, here's a DocuSign. Again, this is not something that I would touch, really at all. But if you're sort of the swing trader, which I know we have some in top 10, it is holding above its this was its huge earnings decline low. Okay, my phone's buzzing here. But, if it can hold support, the market bounces. There's nothing that says this can't bounce 10 or 20 points. And then like Trade Desk, which I think is up today on an upgrade so far, it's up a couple points. But again, you kind of have this sell-off into support, into the 200-day line, into the prior consolidation. So we'll see how it all plays out. But if you wanted to do something like that, go for it. Just, again, go small. Don't risk a lot. I think my main message is there's going to be money made. There's going to be another uptrend here, whether it's in 2 weeks or 3 months or whatever. There's going to be money made where things break out and they run 20% in 2 or 3 weeks. That's coming. That's where the money's going to be made. So right now it's a little bit of nickels in front of bulldozers, so I wouldn't play it too heavily, but there could be an opportunity for a bounce. Now, in terms of things that are looking legitimately good, energy stocks obviously are probably the leading group, or one of the leading groups here. This chart actually understates it because they have all been paying dividends, which this doesn't account for. But my general take on this, Devon I still think is the leader. New RP peak here, new price highs, pretty good volume on the upside. My general thing is maybe you get a pull, maybe the selling spreads, or there's a little bit of a rotation for a week, and maybe you get some of these stocks to, all of a sudden you get a 3-point decline in Devon or something like that. Maybe you put a buyable there with a stop sort of back somewhere in the base. This is on pullbacks. Diamondback Energy, FANG is another one. Again, new RP peaks, new price highs, preferably play some pullbacks here. And then a lower priced one, although it's still a pretty good company, is Marathon Oil, MRO. I mean, it's a good sized company. It's, $5 billion of revenue a year. So it's not a small outfit. But again, new highs here, new RP peak. Pullbacks look good. So energy basically on pullbacks is interesting, as long as it doesn't, you don't want to come in and they're down 12% one day. That's not a pullback. But if next week they fall, 3.5% total, and they kind of pull back over 4 or 5 days and the moving averages catch up, it could be an opportunity. Other commodity plays, CF Industries still looks fine. This is, again, $10 a share earnings this year. Estimates, we'll see what happens. But so far you've kind of just got this, kind of a accelerated higher, persistent pullback here to the 25-day line with some support. CF looks fine. Now looking at my notes over here. One thing I just wanted to mention, this is sort of, again, if you run your screens, 90% of things look either not ready or like junk. But you do pick up on stuff when you broaden your screens. This is just something I noticed. So Hyatt, this is H. This was in top 10 this week, I believe. Losing track of time. But Hyatt looks pretty good, near kind of all-time highs here, even with the virus and all these worries and stuff. You have Hyatt, you have Marriott. This is MAR. These are not dynamic stocks, but just see how it's near all-time highs here. Let's look at the daily chart. Just testing its old high. Maybe it fails. Maybe this is just, hey, it's about to fail, but holding up pretty well this week. That's not bad. And then what was the other one? Oh, yeah, Hilton. HLT is Hilton. Again, on the weekly chart, I think this one might be the strongest. It's at all-time highs. You can see Hilton's actually well above its pre-pandemic high and is sitting near highs right now. I just thought that was kind of an interesting theme and sort of contrary to what you'd expect with all the Omicron or whatever the hell it's called going on. In the chip sector, it's kind of cyclical chips. So Applied Materials, I think I've talked about this. It had this big long run, this big base, broke out. And now it's kind of forming this sort of base on a base. And so I wouldn't say it's real, if you wanted to take a shot at it, I guess. But to me, just in general, you're kind of waiting to see if this can kind of hold up. Maybe it shakes out, hold up, and then when the market kicks into gear, whenever that is, it can break out. But Applied Materials looks okay. Micron, I mentioned last week, MU. This one looks fine. And this one does have the potential to counter trend. I'm not saying it's pretty extended up here, but in general, it kind of dances to its own drummer. So we'll see how that goes. Not much going on. I mean, one of my things this year is growth retail, and biotechs have been kind of, I don't know, really haven't done much for almost a year now, in my opinion. So I wouldn't be surprised if some of these kick into gear whenever we get the next uptrend. So Wingstop is one I continue to look at. I know I've mentioned it. There's nothing going on. It's chicken wings, but it's a great cookie cutter story. You have this huge long consolidation, this big shakeout in here. And really, it's actually pretty tight. I mean, it doesn't, you wouldn't know the market's gone haywire here recently and the Fed's raising rates and all this stuff. So I just kind of keep a distant eye on it. Maybe it's on earnings, maybe not. But the longer Wingstop can hold up, the greater the chance I think it can resume its uptrend. MLM, Martin Marietta, this is construction aggregates. Again, it's not so much that it's powering higher as much as it's just kind of calm. It's not really doing much this week, which to me is a good thing. Now, doesn't mean it can't come in Monday and plunge, but so far so good. Probably a decent risk reward here. Again, if you want to take a shot or just keep it on your watch list. And last but not least, it's just hard, just looking at charts. This isn't really my favorite fundamental stories, of course, but financials, I think I mentioned last week. Let me try to pull this up on the monthly chart. This is XLF. You can just see you had this sort of long term. This was like a 3-year breakout on the vaccine news or right after that in late 2020. And we had a nice run here on the weekly chart up here. And it's really just been kind of 3 big pullbacks. You can't really see it on this chart. It's sort of tight. Let me see it better on the daily chart. Yeah, you kind of had these 3 big pullbacks in here. And now it's starting to resume its uptrend. So financials do intrigue me just from that sort of like student of the market perspective. Comerica, CMA. I mean, again, earnings are supposed to come way down this year after a big bump last year, but this is a nice, powerful move. Bank of America, I mean, this is a liquid, obviously, stock. You got a nice volume clue in here. A lot of these do report early, so Bank of America is January 19th, so you got some of that going, but I am intrigued with some of these, which, really didn't, again, they didn't do anything for years. They had a move, and then they consolidated for many months, and now they might be resuming their uptrend. And last but not least is Schwab, which I find interesting, that kind of a bull market stock. I'm sure some of this is interest rates, but Schwab is also a bull market stock, and it is hitting new highs on good volume this week. So again, they have earnings on the 18th, I think. Yeah, so that's a risk, but so some financials. So back to it. I mean, it's been a tough week, especially if you're a growth investor. If you do have some duds, if you own, I'm just pulling this up because we did own it, and we sold some up here, but we sold some down here too. This is Cloudflare. If you have some of these duds and you have a good size position, I'm not saying you have to sell wholesale here, but take a step in the right direction. You want to be in a position of going toward where the evidence is. And right now the evidence says these stocks are toast in the bigger picture. They could bounce. So I'm not saying you sell it all here or you go out and sell 5 of them, 5 different stocks here. But if you're stuck in some of these, and it happens to the best of us, trim, take a step in the right direction and go from there. Overall, there's going to be another uptrend. Things are going to be, there's going to be money to be made. But right now, it's just more patience is required. Ideally, this is kind of, if you want to be an optimist, this is sort of a third leg down. It's obvious. People are frustrated. It's been a tedious, not just few weeks, but even few months, especially for growth. And maybe this is the final shakeout. But I think there's just a lot of repair work to do. And we'll just take it day to day, week to week from here. Keep most of our cash or a lot of cash on the sideline and keep our capital and confidence intact for the next uptrend. Okay, that's all the time I have for today. Thanks for listening. And be sure to come by again next week for another Cabot Weekly Review.